Afternoon, everyone. Thanks for joining us. We're just going to give a few people 5 minutes or so just to log in, just to save a lot of interruptions with pings on the presentation. So if you can bear with us just for the next few minutes, we've got a few more people still to come into the call. So we'll give them that time and then we'll aim to kick off 5 past or just before. So just bear with us a second. Thank you. Hi, everyone. Sorry, just for those who have just dialed in, we're just giving everyone a couple of minutes just to get dialed in. We'll just wait till about 5 past and then we'll get started. We promise not to keep you too long. We just don't want too many disruptions with people dialing in late or struggling with Teams, etc. So hopefully we should have the majority on the call soon, so we shouldn't be too long. But as I said, we'll aim to kick off at 5 past just to avoid any issues logging in and what have you. Looks like that's everyone for now. We'll just get sorted and then we can kick off the presentation. So, afternoon, everyone. Thanks for joining us. Appreciate your time this afternoon, taking the time out of your calendars to join us for a presentation. We have got a few slides to run through on the subject of our mid-net worth home and contents non-standard product. So obviously we'll take you through that this afternoon. whilst just a couple of housekeeping points, we will put everyone on mute, but if you do have a question, or everyone is on mute, I should say, but if you do have a question to ask, feel free to drop it in the Q&A section on the presentation, or on the webinar screen, sorry, and then we'll pick it up as we end the presentation. So rather than answer them as we go through, we'll make sure everybody gets their questions answered, and if for whatever reason we can't answer it on the call, we'll come back to you separately on it. So just a little bit of introduction then from ourselves. So my name's David Gribben. I'm the lead business development manager at NBS, and my role is to look after the team of development managers that we've got across the country. And obviously we work with brokers like yourselves, various different departments within those brokers, in developing our suite of kind of 35 plus products, of which obviously the mid net worth product is one. And I'm joined by Rob Hawkes, who's our underwriting manager for the household and property owners product today. Rob's the glitz and glamour behind the presentation. He's the knowledge, the guru. I'm basically just here to monitor the chat, as you'll see as we go through the presentation. But with that, I'll hand over to Rob, and he can take you through to the products.
So thank you for that lovely introduction, David. Yes, for those who have met me, hello. For those who haven't, yes, as David said, my name is Rob Hawkes. I run the property and household division of NBS, and today we're talking about our mid net worth offering. What I would say to start with is we're focusing on the product we've launched with Hiscox this year. So for those who've used us in the past, we still do have a sub product, as it were, that is historical with HCC currently. Majority of the business so that you'll be quoting out of our system on that product will be the Hiscox product. So just bear that in mind. But the appetite is very similar between the two. So for majority of people here, you have either used us or have got a quote with us this year. So hopefully you understand a bit more about the general needs of what a mid to high net worth customer is. So I won't go into what defines the individual or the property that we require. Hopefully your demands and needs statements that you present to your client do fit that when you're getting a quote from ourselves. But what this whole presentation is about is really defining about what we want to see from you guys and where we sit within the market. The product itself, we'll go through shortly. We do cater for your, as far as the product goes, it is a Hiscox wording, Hiscox product with the key features you would expect, and the claim service that comes with that. So it is a Hiscox claim service as well. What we do tend to write, when we do get quotes coming through, when it is non-standard, it is a 70% quote rate. So we do quote quite a bit, but when you see your conversions with ourselves on this product, you'll see that probably it's not as high as you want it to be or what we want it to be. That's because it is designed for those non-standard constructions. So again, and features. Sorry. So that is something that we will stress again today. So our product, it is 2.5 million any one location, buildings and contents combined. This is a question that comes up quite a bit. Can we do buildings in isolation, contents in isolation? Yes. So we can do that for you, which I know Hiscox sometimes won't. As standard, property owner's liability is 2 mil. We cover all the basics as you would expect them to be for your mid to high net worth policy. Single article limit for jewellery is 15,000 and fine art 25,000. With all risk worldwide as standard. We also, with an option, do throw in for emergency and legal. And as I said, it's the Hiscox 5-star treatment, as they like to promote themselves. That's what you get when it comes to this product. So the claims that come out the back end of this are handled by them. So we had no issues so far. We shouldn't. So what do we want to write? As far as the appetite for risks we'd like to see from yourselves, it is the real harder to place areas. So it is your claims heavy risks, the ones that Aviva, the ones that Hiscox themselves, or Chubb, or whoever it might be, where it fits our sums insured limits. All these other triggers we can accommodate for. So claims heavy, we'll go through some examples later on in the presentation, but we've had some really good wins on those. Risk management is going to be the key thing about those risks, how they improved it for theft claim, how they improved the security. With escape water, have they got any form of leak detection system that's very popular, or how they got the full pipe redone on the whole property, which they should have done given they should be on a high network contract. Constructions, as I say in most of these presentations, imagine anything that you've got from a grand designs program. That's the things we want to see. So the weird and wonderful constructions, anything but thatch is kind of the motto we have. But we can cater for most things that you should see coming through your doors. Convictions, that one is on a case by case and conviction by conviction basis. We are a lot more open with them. With HCC, Hiscox are probably less inclined to do them, but we can cater to them on a referral basis. Subsidence properties, it is very much dependent on the postcode. I will not sit here and tell you all that we can write everything in the middle of London or in high clay soil areas, but rural properties that have previous subsidence, we should be able to cater for if we've got the right documentation. CCJs, IVAs, liquidations, bankruptcies, again, it is dependent on when, how much, and what's left, basically, on those, so we can cater for those. Properties in flood risk areas, we access flood re. So what we do that's different to Hiscox themselves directly, and it's something that we've always done, is we write that net. So we will give you the best premium possible that we can offer for your client. Then the imbalance. This is something that we've actually clarified recently with Hiscox. But when we mean imbalance, historically we would have said 50% of the general contents against all of these items when it's over that. Now with Hiscox, they're quite open without even referral to them, or it wouldn't trigger a non-standard referral anyway, unless any one of those is over the general contents amount. So we are quite open, and we have quite large internal limits for us to review those. So anything where it is a bit, too hot for someone, we will be able to at least look at it and accommodate it for you. In general, we would like to see anything over 750,000 on the buildings, and where there's content 75,000. We can do less than that. That's just where we have our minimums in our underwriting guides. So we have accommodated under those. It's just, especially obviously, as most of you will know, if someone is downsizing, we can accommodate those people who are moving from a nice five-star property, five-bedroom property to a 1 or 2 bedroom rural cottage. We can still accommodate them if they've got slightly large amounts of jewellery. Non-standard construction. So as I mentioned before, anything but thatch. But we've seen the prefab, German, or Scandinavian type properties, the hoof houses, all the way through to Bungaroos down in the southeast, Wattle and Daub, 1,500 euro build type properties, and other types of prefab. We can really look at most things and give you some competitive rates and premiums. As far as the types of property, we've also seen things from your usual detached risks all the way through to weird and wonderful coach houses, part-owned properties, tenants where the leaseholder has to insure their portion of the property. And the big one, I think, that given the world we currently live in with the new builds and the housing crisis with new builds popping up quite rapidly, we can get a rate turned around and agreed quickly for any new builds as well that come through. So if someone has got a new postcode, your standard systems, your standard insurers are struggling to get a rate, we will be able to do that for you. And what we tend to avoid, I think this is a big one today for people. We can accommodate standard. I'm not going to say here that we haven't written some, but our rates are designed for non-standard risks. So if you've got a rate from your standard markets, likelihood is they're going to be at least 20 to 30% cheaper than what we are currently offering. What I would say is we may be going into more standard markets going forward, but at the moment, standard construction, standard risks, not where we are currently rated for. But watch this space, we will communicate if and when we change. Risks over 2.5 million. So our limit is 2.5. We have in the last couple of weeks got risks over 2.5 when we have referred them to Hiscox. The question always comes up as have they got a quote elsewhere with Hiscox, because they normally would have gone to them probably via another broker or yourselves originally. So if Hiscox have quoted it and it's over 2.5, it's unlikely we will be able to do anything with there. High profile clients, so young professionals in their 20s, I will add to this list as well. So people who are in finance in London and like to go out on a weekend with their watches on their wrists probably aren't going to be with an appetite. The same for footballers, actors, YouTubers, social media, the influencers. Falls outside of current appetite, I would say future appetite. But we can accommodate them, say if they were slightly older, slightly retired footballers who have gone into another line of business. We have them all, insurance, especially retired rugby people who turn up at Lloyd's. We will accommodate them if they come through. It depends on the profile, and I think with most of all of these things on this page at least, it depends on the profile of the risk and how much information we can get, so we're comfortable that we can justify what we're doing. Businesses run from the home. We have our own scheme for business home, which is on our standard contract, which extends to cover the property owner's liability and additional stock and trade equipment. That would be better suited. So I would steer you there. But if they do have a business running from the property and it is not high in volumes of people coming to the property, Airbnb being an example, you wouldn't want on this scheme. But if they had, an office run where they had 1 or 2 people a month, that's fine on this scheme. But not any large numbers of volumes. And then obviously, as mentioned, Hiscox on capacity on 90% of the risk to come through. They are the cheaper premium out of the two as well. So if Hiscox are already quoting, I wouldn't bother coming to us, because we will. I do mean Hiscox both directly and or via another MGA. It's Hoxton. I think some of you might have already access to them. If Hoxton are quoting, they're going to be cheaper because it's pretty standard. So I think their average premium is 2,100. Ours is about 2,006. So that's the difference in the price. So if they're quoting, they're probably going to be a much more competitive premium. We do have HGC, who's as I said before, who sit behind us on our historical mid-net-worth product. It is designed for risks that fall outside of even this appetite. So you'll see more of the conviction business, the heavier liquidations that might fall onto that if the premium suits. David, I'll let you take over the nice easy bits.
Thank you. Suits me. So yeah, what we wanted to do was just run through some risks that we've converted recently, some case studies or some live examples. So as Rob's mentioned, obviously the product's got varying different elements to it and various different aspects, which makes it non-standard. So we just wanted to run through some cases where that non-standard has obviously led to the win from the conversion. So the first one is a case with challenging claims history. So it was a risk that was declined by 3 of the major insurers in the market, largely due to the claims. Obviously we that's kind of right up our street in terms of appetite. So we looked at the risk. We underwrote around the claims, the issues that had been caused in the past. We implemented some smart risk management from an underwriting approach, and then obviously we introduced a balanced excess structure as well to cater for the likelihood of the frequency of the losses, which then meant that the case went on cover from our perspective. So an example of a claims heavy risk that was challenging to say the least from an underwriting perspective and a broking perspective that we've managed to turn into a win on the product. We had a listed property in Scotland, which had a history of flooding, or has a history of flooding. This was all about the speed from an underwriting approach, where the case came in at 11:30 a.m. We quoted it straight away, and it was converted by 1 p.m. So an hour and a half later, broker and client accepted the quote. The case went on cover, and we actually gave them full flood cover via flood re. So it just showed again the strength and depth of the underwriting, but also the power of the product and the ability that we've got to see to flood re, as Rob mentioned earlier. A high value contents risk. So a risk where insurance was previously declined due to the imbalance, as Rob mentioned in the presentation, or the perceived imbalance from the market. We reviewed it. We looked at the alarm that was currently in place, the current safe. We advised on both that we wanted a slight change. The broker and the client both accepted that, given the sums insured, and we secured the cover through what was a new broker at the time as well. So it was one of the first cases they put through, which again was like a double win. So perfect for us. Just running through some more. Sorry,
the system's just frozen. 1 second.
Teams is letting us down today.
I think it's our computers with this.
I think the IT world's just melted down today, hasn't it? It's just gone crazy. But yeah,
there we go. There we are.
There we go. Sorry. So, a case with subsidence, a history of subsidence. So, despite that, obviously the property had been rebuilt. Improved foundations had been put in, water management work had gone on the ground, and we ended up quoting the subsidence cover and obviously a reasonable excess. So we were able to grant the subsidence cover, even though the area did have a history of subsidence, but obviously we were able to underwrite around that using kind of knowledge, expertise, technology available to us, and obviously we went on cover for that one as well. And then there was a risk undergoing some renovations, 100k's worth of renovation work. It was non-structural, non-heavy, but basically what happened was we applied the appropriate contract works and theft restriction whilst the works were ongoing. And then once the works were completed and been signed off and handed back to the client, the broker had confirmed that to us. We added the cover back in once the work had finished and the house was fully occupied again. So again, just some of the examples, 5 examples there of kind of how the varying different areas of the product reacts to different elements of risks that are presented. But I think overarching it all is obviously the product, but there's the underwriting expertise that sit behind it as well within Rob's team.
I think one of the questions has come up, which is actually linked to the example previously from Gavin. I'll come to the other 2 that have been later, but I just thought I'd go just about the challenging claims history, what we do. So when it comes to claims in general, it does depend on what they are and how the client has reacted to the risk management of that property. So in this example, there was a couple of theft claims. 2 were away from the home, so and we weren't the client actually on this case didn't need the contents cover, but the other one there was one subsequently that was at the home. So since the claim, the client had installed, I think it's pretty much everything you could ever want as an insurer on the risks. There was the usual CCTV, alarms, they had ground sensors installed. They had every single window done properly. They had taking a lot of steps outside of just the norm as well. We had said to them we could consider contents, but we would probably limit what they would do. We would be covering as far as the jewelry, which they were happy with. But they decided to take out the buildings only, which we were fine with as well because of the work that had been done. So we had put on a fairly low excess because when we got the breakdown from the claim, how much what they'd done to the property to improve it, plus the actual theft aspect that was linked to the buildings side, it was fairly low. So I think we put a £2,500 theft excess, and a fair load. It wasn't anything extortionate, and the client managed to get the cover in place that they required at that point in time. They have actually subsequently come back and asked about adding contents on, which we have quoted for in the last week, so we're just waiting on confirmation. So, but again, it's with fair terms. On this case, we have asked for personal custody clause on some jewellery as well, but that's linked to the other claims away from the property. So in general, it does depend on the general risk management. That's that. If they've done the risk management, if they haven't done anything, it's unlikely we'll be able to offer the peril. But if they have done some basics that you would expect and hope, it's definitely something we can cater for.
Brilliant. Thanks, mate. So just a run through on the main features and benefits of the policy. So the contents, as we mentioned, can include jewellery, fine arts and antiques. No issue with that whatsoever. As we mentioned or highlighted in the previous slides around the claims examples, we can offer a speedy turnaround from an underwriting perspective. So cases that come in last minute, or cases where, particularly because they're slightly non-standard, the insurer may have had an issue or need to come off cover, we can step in and help that. The speedy turnaround's backed by experienced underwriters. So we have a very experienced team who specialise in this area of the industry, so this sector, and that really counts for an awful lot. We only work with A-rated capacity, as Rob mentioned, HCC, for some elements of non-standard risks, but in the main we've got Hiscox, which is obviously the product that we're talking about today. We love cover for non-standard construction. We're happy to provide it, obviously excluding thatch, but based on all of the different elements that Rob ran through earlier in the slides, and we're able to offer highly competitive rates with very generous commission levels as well in the product, which all stacks up as a fantastic opportunity, really. And that's pretty much it from us. We obviously didn't want to run you through death by PowerPoint, but we wanted to obviously give you a quick run through in a nutshell around the product and the highlights, obviously the opportunity to hear from Rob as well. We do have the Q&A open, so there's the opportunity to drop some questions in. We've got a few in already, which we'll run through in just a second. Just one of the, going back to the housekeeping points I mentioned at the start, we are recording this session, so we will distribute a copy of this presentation for you and your colleagues who may have missed today, or to share wider within your groups or your teams. So following this, you will get sent a link and you'll get sent a copy of the email and some policy documentation details as well, and how to access the policy. What we would say is, if anyone knows they don't have access to the system, or they don't have access for colleagues who may need them, who work with you or anything like that, then please drop us an email through. Our email details on the second slide, where our pictures are, that we talked you through earlier. So drop either myself and Rob an email and we'll get you set up on the system, or whoever needs to be set up on the system. There's no limit to the amount of people that can be set up, so please just drop us an email through with the email details of any colleagues or any new starters or anything like that may benefit from access to the product and our wider portal with the rest of the products that we offer as well. With that, we'll just jump to some questions. We do have a few. So the first one's from Paula. Paula said, do you cover SIPS panels?
Yes. It's the quick answer, yes.
That's that, Paula.
Yeah, we do. They're not an issue for us. We might ask some additional details of what the full make, the breakdown if you have that, but in general, we write them very, very often. We write them on our commercial side more, but obviously with the way that the world's moving with paneling on everything and household especially, we can accommodate, and we have written them in the past couple of weeks.
Perfect. We've got a question from Daniel. Hi, Daniel. I hope you're well, mate. So just put a little note in there that says, where do NBS stand on the insured undertaking structural renovation works at the property within the first year of the policy, particularly if the works are of a significant value, for example, 100k plus?
So within our Hiscox wording, the client does not have to tell us, or even you, but it would be nice, up to 150,000 before they have to tell us. That's something that Hiscox have asked for, and they do in their current policy. Now, we do ask at inception if they are doing works, and we will ask for the breakdown if they are aware. But technically, they do not have to notify us up to 150,000. We are very open to works. We have some set structures of things which I can go to in more detail. So, Daniel, if you want if you've got a specific example of something that's coming up on your desk, or we can go through some examples of what we might do in a certain situation. But in general, with the conversation we've had with Hiscox, they are quite open to looking at works. We just normally require full information about what works are ongoing, what the limit of the contracted liability is, on indemnity is, sorry, and if they've got a copy of the actual planning permission or works they're actually undertaking, that's always useful, so we can get more of an idea of what's going on. One thing we do not really like is London-based risks where they're going down. It's just anything that is subterranean, not something that I would particularly like to underwrite. Another bit of Hiscox.
No, that's fine. It makes perfect sense. Gavin's asked a question. I think we did answer that earlier. Just for clarity, I'll read it out. With a case example, challenging claims history, can you be specific with the claims excesses and the risk management requirements? Hopefully, Gavin, Rob's given you a detailed explanation of that. But if you do require a bit more, drop us an email through, and we'll be happy to answer that after the call. Oliver's dropped a quick question through. It says, do you deal with older properties that don't meet the standard security requirements, like key operated locks on accessible windows or non-standard locks on final exit doors, etc.?
Yeah, we do. It's a difficult one given how much content. So we would ask if there's any additional security they've got in place. So in general, we do look at them. We have written them. We accept that there is for certain reasons, either like older properties and they've got sash windows and they haven't got the right locks on, or if they have, I don't know, it's grade listing, they can't get certain alarms on the property or whatever. We can accommodate them. The thing is, we are on the security. We are a bit more led by insurers and their appetite. HGC would be more open, I would say, than Hiscox are, but the right risk, the right profile, for what the right covers are, we can accommodate pretty much anything on that. We just might be not the right premium, I would say, potentially on those ones, but that would be where they might push up.
Thanks, mate. We've got a question from Mark, which says, what's your view on previous historic subs? Do you have a cut-off period since the incident? Where would you give full perils? And on more recent cases, is a COSA sufficient, or would you need more?
It would be sufficient for a COSA or a certificate of structural adequacy. So the general rules are within NBS, and this applies to everything we write on the non-standard. We'd like to know everything in 20 years. That's kind of, especially given the year we just had, we would like to know as much as possible. Anything that has been settled in the last 12 months, we are unlikely to offer subsidence. That's the first cut-off as far as when we will not give subsidence. So if they've got a COSA signed off in the last 12 months, unlikely we're still going to give subsidence cover. However, between that and 20, we have different area ratings and age ratings so I can't give you it has to be on a specific postcode in the middle of London. Again, as I said earlier, it's unlikely that I'm going to say today we will be able to give you subsidence cover on a property that's had subsidence for the last 20 years because of what our insurers' data tells us, or their data is telling them. But a rural property that's had it and it's had all the mitigation works sorted, subsidence cover at $2.5 grand excess should be easily achievable. It just depends on the specific details of that specific risk, the surrounding area, the trees, the soil, all those things that come into the rating factors. But we most things, when we have referred them to Hiscox, when it even has had previous subsidence and say is a medium to high score, they have come back with a higher excess rather than exclude the peril. So even they are more open than we thought they would be.
Thanks, mate. We've got a question from Catherine as well, which says, what's your view on covering businesses from home? I know we touched on that in the presentation, but it might be worth just giving a bit more.
Yeah. So again, it's very much dependent on the type of business. So again, low volume of people coming to the property. So that could be guests or employees. We wouldn't like to have a large commercial business or a large Airbnb bed and breakfast on this scheme. We have schemes for that elsewhere, either the business home or the guest house policy within NBS. This is very much designed for low footfall. But if they have, if they do, we've got artists on the books. We've got people who have online therapy sessions, but maybe do 1 or 2 sessions a month in an outbuilding. They don't come into the property. We can put theft limitation and those types of risk, those type of endorsements on the policy to mitigate those things, and they still get the cover for their correct jewellery and buildings cover. So it's very much dependent on what those factors are and how many people are coming to the property.
Thanks, mate. That's brilliant. I don't think we've got any more questions. I've just checked the chat. We haven't got anything in there. We've got nothing else on Q&A. I don't know if anyone's got any questions that they want to submit quickly. If not, we'll call it a day. But feel free, if you have got any questions, just to drop us a line. Like I said, our contact details are on the presentation, and you will receive a copy of the presentation after this with some more contact details on it as well. So by all means, if you as soon as you dial off and you think, I wish I'd asked that question, or you don't feel comfortable asking it in a wider environment, just drop us a quick question through and we'll sort it out from there. The chat usually is open for quite a while after the call. So if you've got anything, again, just feel free to drop it in there. We'll pick that up on the team's messaging. But failing that, that's us for now, I think. So thanks everyone for joining us. Appreciate your time once again. Really good to see as many people joining, and really appreciate it. Hopefully it's been really useful, and hopefully we've given you a few tips and hints, and you can think of clients already that will be suitable for the policy. But anything you need, just drop us a line and we'll sort it out from there. Thanks, guys. Appreciate that.
Thank you.
Have a good afternoon. Take care.
See you guys. Thank you.